Коллеги, добрый день. Рада вас видеть снова у нас в Банке.
Dear colleagues, good afternoon. We're very happy to see you again in the Bank of Russia, and we're now starting the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And we shall begin with the statement by the Governor following the results of the Board of Directors meeting. Good afternoon. Today we have made the decision to decrease the key rate by 150 basis points to 8% per annum. Our decision is based on a comprehensive assessment of current conditions and the updated macroeconomic forecast. In May-July, inflation has been slowing down progressively. This was owing to a stronger ruble and a downward adjustment of prices for the products that had earlier become more expensive. In recent weeks, this deceleration has become larger scale, which suggests that the consumer demand has also contributed to the slowdown of inflation. We have lowered our inflation forecast for this year to 12 to 15% per annum. The forecast for the next year remains at the level of 5 to 7%. Our monetary policy takes into account the need for a structural transformation of the economy and is aiming to return inflation to the 4% target in 2024. I would now dwell on the factors behind our decision. Firstly, price pressure continues to weaken. Prices have been declining almost continuously for 9 weeks by now. We still believe that the main reason for the deceleration of inflation is the adjustment of prices after their surge in March. Then the ruble drastically weakened and companies' costs rose considerably. Soaring demand made it possible for them to pass higher costs through to prices. By the moment, the situation has changed. The ruble has strengthened significantly. Manufacturers and trade companies can see that some prices were over-increased. However, prices cannot adjust overnight. This process takes time. Businesses are trying to conceive what level of prices will be acceptable for consumers and cover their rising costs. The substantial strengthening of the ruble has influenced the perception of prices and households' attitude towards purchases. This is evident from changes in inflation expectations. In July, they have edged down to 10.8%, which is the lowest level since March last year. People believe that current prices for many goods are unreasonably high and are waiting for them to ease down. Companies' short-term price expectations continue to decline. They have returned to the level of spring 2021. I will now speak of how we assess the impact of consumer demand on inflation. In recent months, this effect has been disinflationary and, coupled with a stronger ruble, has ensured a faster slowdown of inflation. Currently, the propensity to save is high, although the situation might change. A high saving ratio is partially associated with the fact that people were unable to buy what they wanted due to the exit of foreign companies and thus decided to make precautionary savings. A key assumption of our forecast is further trends of consumer demands. On the one hand, the propensity to save can remain high. Amid increased uncertainty, households prefer to save more in order to have a safety cushion. This is prudent behavior, which will help people feel more confident in the case of part-time employment schemes that might be introduced, forced leaves, or employment issues. Furthermore, the current decrease in prices and the strengthening of the ruble might be perceived as a signal to postpone major purchases now in order to buy these goods later at lower prices. On the other hand, the scenario of the pandemic might repeat itself. Then consumer first decrease notably their consumption and later on, after the lockdowns were cancelled, recovered it as quickly. This happened in both Russia and many other countries. Today's savings, which are actually necessitated, are a compressed spring in the economy that might cause a surge in consumption under certain circumstances. If supply of products and services is limited, this might quickly speed up demand-driven inflation. There are already some emerging signs of a rise in consumer demand. I will specify 3 of them. First of all, as shown by surveys, in July, people have significantly improved their estimates of the suitability of the current period for major purchases. Secondly, deposit rates are going down, due to which increasingly more people prefer to consume rather than save. Thirdly, the contraction of the retail loan portfolio observed in April-May reversed to its expansion. Further trends of consumer activity, that is, whether demand will be growing faster or more slowly, and how this growth will correlate with the capacities to ramp up output, will largely determine our decisions on monetary policy. Secondly, the data we are receiving suggests that the economic decline will be more extended over time and possibly will become less deep. Speaking of the current year, the decline in GDP is forecast to be less significant, largely owing to a more moderate contraction of exports. This is predominantly because oil exports are partially redirected to new markets. As to imports, the dynamics are in line with our expectations. After a considerable reduction, imports started to bounce back. Primarily, we can see an increase in the imports of consumer products owing to the arrangement of new supply routes. Contrastingly, there are no clear signs of a recovery in the imports of intermediate and investment goods for now. Investment activity is constrained not only by difficulties with logistics for equipment supplies and significant fluctuations of the exchange rate affecting companies' business plans, but also by economic uncertainty in general in the conditions of the structural transformation, forcing businesses to be more cautious with regard to the prospects of the implementation of their long-term investment projects. The economic situation depends on how companies adjust to the changing conditions. This adjustment is very uneven across regions, industries, and even individual companies within the same sector. Overall, it is possible to note that many companies have managed to avoid a fast exhaustion of their stocks that could have caused interruptions of their production chains. To replenish the stocks, enterprises need to search new supplies both in Russia and abroad. This will take time. According to our monitoring of businesses, the situation with stocks did not worsen over the past 2 months, but it has not improved either, which is still a factor of potential pro-inflationary risk. This topic is covered separately in an insert in our recent regional economic report. The transformation of the economy will be evident from changes in the labor market. We consider this to be a key indicator of the transformation process. I would give an example of enterprises experiencing problems with sales. One group includes companies totally focused on exports that used to work predominantly for European markets. The other group comprises manufacturers of certain components for auto groups, furniture factories, and household appliances assembly lines localized in Russia. Disruptions in production chains decrease the demand for their goods. Consequently, these companies will be forced to either change the range of their goods or reduce their output. Concurrently, there are industries opening up for more opportunities for import substitution. They will be creating new jobs. Today, the situation in the labor market is steady and unemployment remains at its record lows. Businesses introduce part-time employment schemes. Nonetheless, as the structural transformation progresses, we will observe an increase in the transfer of manpower between companies and sectors. Considering that the current economic processes are extended over time, we have revised our GDP forecast. According to our estimates, the economic decline will be less deep this year, namely 4 to 6%. Over the next year, GDP will edge down by 1 to 4%. To illustrate future dynamics, it would be more representative to make a quarter-on-quarter comparison. We expect GDP to be 1 to 2.5% higher in the fourth quarter of the next year than in the fourth quarter of this year. Thirdly, monetary conditions are gradually easing. Credit and deposit rates continue to go down, just as yields on short and medium-term federal government bonds. Yields on long-term bonds remain almost the same. Credit activity has revived slightly while still staying moderate. Mortgage lending is recovering at the fastest pace, but mostly owing to subsidized programs. Unsecured consumer lending has started to expand as well. Corporate lending is rebounding, with foreign currency loans being replaced with ruble ones. In the context of increased uncertainty, the propensity to save remains high. Despite a gradual decline in returns on deposits, households still hold their funds with banks. However, the proportion of time deposits is shrinking, whereas that of current accounts, being the most liquid part of savings, is growing. They might be quickly redirected to consumption if people's sentiment changes. I would like to say a few words about the balance of payments and the ruble exchange rate. In the new conditions of the sanctions and capital controls, as well as the absence of the fiscal rule, the exchange rate has become more volatile and is forming primarily under the influence of the current account. For monetary policy, this means that inflation being impacted by the exchange rate is also becoming more volatile, and accordingly, interest rates in the economy might become more volatile as well to support inflation close to the target. If the current account contracts already beginning from the third quarter, as assumed in our forecast, and the exchange rate adjusts to this change, its disinflationary influence will be smoothed out. As regards the risks to the forecast, they are described in detail in the press release. Overall, it is possible to say that there are three main sources of uncertainty over the forecast horizon. These are external factors, risks created by the geopolitical situation and the global recession, fiscal policy, and possible changes in the propensity to save. A further path of the key rate will depend on the future balance of risks for the path of returning inflation to the target in 2024 that we have predicted. The rapidly changing situation characterized by a sequence of processes diversely influencing inflation and the economy requires more flexibility in our decisions and closer attention to high-frequency information. According to the updated forecast and our today's decision, the average key rate for this year will equal 10.5 to 10.8% per annum in 2022, which conforms to the value until the end of the year in the range of 7.4 to 8%. and 6.5 to 8.5% in 2023, as well as various other processes that we're taking into account, which require on our part better flexibility when making our decisions and stronger attention to the current data. Thank you very much for your attention. Thank you, dear colleagues. Now we're going over to the Q&A. Please don't forget to introduce yourselves and name your agency. Rita, the first question comes from Rita, please. Thank you very much. Good afternoon, dear colleagues. Rita Shpilevskaya, TASS Agency. Today's decision by the central bank became an unexpected one. Even the most bravest analysts didn't expect 150 basis points. I would like to find out what kind of decisions the board of directors had on the table and whether there is still potential for this subsequent rate reduction in the end of the year. Thank you. We have discussed in detail three options: 8, 8.5, and 9%. The potential for further reduction of the rate within the midterm outlook remains, and we demonstrated this in our forecast of the average key rate. If you watch the trajectory, it has been gradually going down, but it will all depend upon the incoming data. As I mentioned, the situation is uncertain. There are many diverse factors, very fragmented in what they comprise into, and so we're going to fine-tune our monetary policy so that by 2024 to go back to 4%, but we will definitely respond to all of the information that we receive and all of the trends that shape up. Nastya, next one, please. Thank you. Good afternoon, Savilova Anastasia from Interfax. Could you please tell us what are the parameters of the new fiscal rule that are being discussed right now? Do you agree to the cutoff price being raised, let's say $60 per barrel, and linking the new rules of production and exports? And the second question I cannot but ask you, what is your take on the decision by the government not to provide foreign entities to sell their Russian subsidiaries here? Do you support it? And do you agree that one should introduce external management in the foreign bank subsidiaries? And in that case, who is going to manage them? The government banks as being proposed by some of the parliamentarians and the central banks, or will it be some other structures? We are currently discussing with the government and the Ministry of Finance a possible fiscal rule mechanism. We support renewing the fiscal rule. Of course, it's going to be modified. We think that it is an important mechanism that ensures the stability of the economic indicators and the budget indicators and the budget spending, irrespective of what is happening to the oil and gas market. But specific things, until they are officially announced by the government, is something that I would like to avoid to comment. With regard to the Russian subsidiaries of the foreign banks and permission to sell them, indeed, this is the government commission that is looking into that. We are participating in it, and every time these decisions are going to be made individually. But of course, the things that are being taken into account are what kind of relationships there is between the Russian subsidiaries and the foreign banks that they belong to. If the Russian subsidiaries of the foreign banks, and under the Russian legislation, these are the Russian banks, if they comply with all of the standards and maintain normal consumer relations and do the settlements, then there is no reason to introduce any measures. Dmitry, next one, please. Dmitry Butrinka, Kommersant. I've got two questions. The first one, 150 basis points. This is really a bit too much, and this is a very strong signal, and quite evidently that the central banks had on its table the kind of information that the marketplace didn't have. Could you please tell us what is it that you know that the market doesn't? What was the biggest driver behind you making such a dramatic decision? And my second question, do I understand correctly that the new forecast, as a minimum, takes into account the global economy stagnation within 2023? As far as the 150 basis points are concerned, we didn't rely upon any information that was not known by the market. We relied upon the data known to the market because we see the current inflation data. To us, it was very important to make sure that within the dynamics of the current price movement, the price decline was registered within a broad circle of products, and the inflation expectations have gone down to the level of last year, I think. Were they not? Yes, the beginning of last year, and if you further take a look, they were closing in on the level where they were towards the end of 2018, beginning of 2019. And we have updated our forecast. If you were able to see, we always make our decision not only based upon the actual information coming in, but also on the basis of the forecasting exercise. And our inflation forecast has changed quite significantly. We have lowered it, the range. And so one should say that after the recent data came out about inflation and inflationary expectation, the experts and analysts' view also was reaching in a consensus towards a deeper reduction of the key rate. Now, with respect to the global recession stagnation in risk, indeed, there is such a risk, and we do take into account the fact that there is such a risk, and Alexei Borisovich can further comment what exactly we have accounted for in terms of the external environment and the global economic development. I don't think I would really go deep into this particular topic, because in a week's time there will be a report on the monetary policy and it will have greater details. But at a qualitative level, Dmitry, you are quite right. Whether one should describe it as a stagnation, that is at anybody's individual discretion, but the fact that the economic development pace is lower than the long-term trend, that is true. Delia, please. Thank you very much. Delia Rosontseva, Elvira Novosti. I would also like to ask you a question about today's decision. It was quite a dramatic one, and several times you've mentioned the word deflation. Does it mean that the central bank has become more attentive towards deflation, and should we expect that there's going to be more of a deflation than inflation? And should one construe that we will face deflation considering the end of the August and September? Well, first of all, I was first and foremost talking about the disinflationary factors and disinflationary risk, because that converts into the prices being pushed down, and disinflation. This is the kind of trend that the one that you're describing, that we do not see. There's no deflation trend. And once again, I shall repeat, deflation, something that we've been always talking about, that deflation is rather a steady price reduction. It should be measured. One should look at it through the annual inflation, and the annual inflation is still at the double-digit level, while the price is going down within certain weeks, within certain months, is something that we see quite often. We're usually familiar with the prices going down when the prices go down for fruits and vegetables, but this time, during the month of June, the general price index went down in many ways. Once again, I shall repeat, and we continue thinking so, because of a considerable price adjustment after a very strong price growth in February, March. So we do not see any trending in terms of a steady deflation. Next question comes from online. Alexander Wild. Life Investor Project. Sasha, please. Good afternoon. I have the following question, which is quite common. Currently, banks and brokers introduce new fees for maintaining hard currency and keeping it because of the difficulties with foreign transfers. Because what really frightens people, people who have certain currency on their accounts. And so the common question is, will US dollars in Russia will be subject to sanction? Will it happen in such a way that people will neither be able to buy or sell US dollars? And will the banks be in a position to somehow freeze US dollars on deposits, like the case was with stocks? And what will happen if Moscow Exchange, Moscow Settlement Center will be subject to sanction? What kind of problem the households may face in terms of them having foreign currency? Well, thank you very much. Honestly speaking, sanctions have already been introduced on circulating dollars in Russia. The toughest approach is something that you can see in the banks which are under sanctions, because any transfers, any settlements using dollars are very much difficult there. So, of course, to have currency deposits may be related to risks of a respective bank being sanctioned. And that is why households and businesses must bear this in mind. And actually, we see that quite a few businesses are taking it into account, and they're moving their assets. Not only companies, also households. They are relocating their assets into a safer, more reliable forms of asset holding, if not rubles, then currencies of the friendly countries. You had another question. Can it happen in such a way that people won't be able to buy dollars in Russia? Well, even in the most apocalyptic, if you will, scenario, the cash dollars are still going to be circulated in this country. I can only give you one figure based on our estimates. the foreign currencies in cash amongst households is about $85 billion, and so the banks currently can buy and sell this currency. So certainly the circulation of currency in cash will continue. As far as the Moscow Settlement Center is concerned, certain sanctions have already been applied with respect to other banks. We'll always take into account the prospects of such risks, and that is why we incentivize the kind of policy which stimulates the banks to reduce their currency holdings, if not the currencies from the unfriendly nations, then into the currencies from friendly nations. Yulia Starostina, I represent Debal publication, and I would like to ask a question about the fiscal rule. I understand that the discussion continues about, and it's premature to say anything, but could you please raise the veil of the stabilization of currency following the new fiscal rule? Because if the central bank would like to eliminate the liquidity effect upon the buying currency into reserves, then you need to have certain mechanisms of stabilization in place. Could you please tell us what is it that you're discussing? Currency transactions, non-liquidity of the banking system, open market transactions. Also, with your permission, we have now entered into a third quarter. Could you please tell us, are you registering any deficit in the labor market? Oh, no, sorry, in the product market, but with respect to the labor market, could you please tell us what are your expectations about the labor market status during the autumn? Thank you very much. With regard to the fiscal rule, well, the way it works, to begin with, the fiscal system takes from exporters rubles, right? And in this way, it takes the rubles out of the economic processes, and when the currency transactions take place, we, in a mirror-like fashion, attain it to the Minister of Finance, and so those rubles are returned into the economy, and that is the way this sterilization takes place. So, of course, if the fiscal rule is introduced, then most probably this kind of currency transactions will be taking place. Alexei Borisovich, if you will, you may comment on it as well. Well, maybe I would just specify it further in order to make things be on the same page. The idea behind the currency part of the fiscal rule transactions specifically is related to make the currency purchasing using the additional rubles collected as additional income to take it back into the economy. So the fiscal rule-based currency transaction is the thing that neutralizes the fiscal rule in terms of its impact upon the monetary aggregate. So no additional activity is required here. And as far as the possible shortage of product is concerned in goods, yes, certain goods have disappeared from our market, branded goods and so on and so forth, but we do see that the substitutes are coming in, understandably. Other brands, other manufacturers, if you talk about consumer goods, this process is going to continue. But we don't see any systemic problem here. With respect to the labor market in autumn, as I previously stated, indeed, the current situation is stable, it is calm, and unemployment is at its record low. But of course, the situation in the labor market in many ways is going to be determined by the speed of the structural transformation. Once again, what do we mean by it? Some companies are going to reduce their output, optimize their employment. Next to them, either new manufacturers are going to appear, or the ones that will require additional employment because they are going to find niches in the market. So there's going to be an overflow of labor, which will certainly reflect itself upon the indicators, general indicators such as unemployment. I mean, when people are looking for a new job in the interim period, so it is very important for us to look at the situation, not only through the general indicator, but also in terms of the vacancies and what's the kind of demand for labor there is in other industries. And of course, there may arise other issues that people will have to upskill or retrain themselves to meet new requirements. So government-sponsored programs here are also play a role importantly. So a lot will depend upon structural transformation. So we're not making any quantitative forecast about it. Next question comes from online. Elvira Nabiullina. Tatar Information Agency, please. Good afternoon, Elvira Nabiullina. I've got two questions to you. The first one, during the pandemic, the key rate went down to 4.25%. In the current situation in the economy, this is hardly a little one. So I'm quite interested to find out what is the red line for the key rate that the central bank may lower to. And the second question, is no secret that there's a very good grain crop this year, but do you see a risk of food deflation in autumn? And what will the monetary policy, how it will take into account and how it will reflect if it happens? As far as the food prices going down in the autumn, it is possible good yield, it is a disinflationary factor which will help inflation to go down. However, the fluctuation of the food prices, which is the usual thing with us within a standard seasonality cycle, this is not the kind of factor which may affect the monetary policy, because the monetary policy, it responds to a stable inflation factor when deviation from inflation occurs because of the stable factor, which may also impact inflationary expectations and various secondary facts. So fluctuation of the food prices is rather kind of a factor which is reflected in the current price levels, but it is the one which usually is of a one-off effect. Now, with respect to your first question, I would like to begin with the following. It is true that in many aspects we compare the current situation with the pandemic, but essentially these are two different crises, because during the pandemic crisis could have been described as a cyclical one, when in the very beginning there was a demand shock because of the lockdown, because of the people simply not being able to consume the way they had been used to, and we were lowering our rates specifically to create the impetus behind such a demand, and the demand very quickly, even faster than our expectation, was able to rebound. But later on, other problems started manifesting themselves on the supply side, which turned out to be of a much longer term nature in terms of supply chain disruptions, and similar things basically led to the demand growing but the supply not being able to catch up, which inevitably evolved into a higher inflation in the second half of 2021, and with inflation expectations spiraling. So currently the crisis is a structural one, and in many ways the supply shocks acted as its catalyst. And so the reduction of the rate, even a dramatic one, won't be able to compensate for similar effects like it used to in 2020. So that is where we're very scrutinous about what's happening to the consumer demand and to what extent its dynamics run in parallel with the supply dynamics. So one shouldn't really compare these two periods of time directly. You referred to the red lines. There are no red lines, whether below or above our decision of the rate range. The rate is going to be defined based on the trajectory, which ought to make sure that the inflation goes back to its target by 2024. Colleagues, next one, Olga, please. Good afternoon, Olga Nikolaeva, private investor, investment advisor. My question is about the recovery of the households lending, because as you said, the household have switched to the saving behavior for the economy. It is very important to be able to support the good rates of lending. So my question is this: does the central bank have any aims to bring the lending rates back to the level of 2021? If positive, to which extent the central bank believe the current level as being sufficient, the current interest rate, so as to be able to reach such lending activity? Now, like you were saying, to set an aim in terms of the lending activity, it's a different part of the monetary policy. This is lending targeting, credit targeting. We're doing inflation targeting, and the inflation is impacted both by lending, without doubt, but also by other activities. I mean, the credit deposit mechanisms, this is a transmission element, but in terms of the specific indicators in lending, as to the level of lending, we are not trying to identify it, because our basic thing is the inflation forecast, and we're making our decision based upon our inflation forecast towards the kind of level that we need to take the inflation back to. Alexei, I can only add that, yes, indeed, the credit or lending component is definitely part of the monetary policy transmission mechanism. The most important, because the lending channel is the most important one under the current conditions, but it is not the end in itself. Because in the end of the day, credit and its contribution into the money mess, because the money mess under the influence of credits as well as other factors, including the fiscal system as well as the payment balance situation, eventually should grow at the kind of pace that inflation has, which is 4%. And that is our rationale in terms of our fiscal policy decisions. Dear colleagues, the next question comes online. Evgenia Pisminaya from Bloomberg. Zhenya, please. Good afternoon. You have been debating with the government about the possibility to ease the ruble exchange rate. Have you arrived at a certain consensus? Is the Minister of Finance intervention still possible into the friendly countries' currencies? If positive, which ones? And what is the status of litigation to return your Russian international reserves? My third question, you mentioned that the import is recovering. Based on our estimates, based on the information coming from Russia's foreign trading partners, in May, import grew by 17% month on month. And this recovery is more on the side of the consumer goods. Could you please share with us your views as to the import recovering and whether import of consumer goods is above the last year's levels? Please. Thank you. As far as the exchange rate is concerned, our position here remains unchanged, because we believe that the exchange rate should be a floating one. One shouldn't switch to the kind of activity which would be targeting the exchange rate. But we don't rule out the currency interventions, which are possible with the floating exchange rate as well. But within the fiscal rule framework, that is our position. Yes, interventions are possible. Into which kind of instruments? Friendly countries' currencies or some other instruments? That is rather the prerogative of the government. So this is the kind of debate which is ongoing. Now, with regard to the status of litigation to unfreeze our golden currency reserves, this is a complex process. We are currently preparing ourselves for this. Now, about imports. Indeed, after a dramatic decline, imports started recovering. In the first place, consumer imports, the indicators of the investment interim imports recovery is something that we do not note yet. As far as the data is concerned, we are disclosing it on a quarterly basis. The imports during the second quarter and overall imports of goods and services throughout the second quarter went down compared to the first quarter by 22%. Year on year, I think, 22%. And these are the value indicators. We understand that at the same time, the import pricing, costs related to the transportation, insurance, and the global price growth led to the physical volumes in imports falling a little bit further down. Mr. Zabotkin, yes, with your permission, I would add a few words about the currency interventions. One should understand, again, based on the question that you've previously responded to, that whenever currency is being purchased as part of the fiscal rule transactions, the economy gets back the kind of rubles which have been taken out of it previously. And so additional monetary mass as a result doesn't emerge, and this transaction doesn't create any inflationary pressure. Now, if the currency purchasing transaction is done by central bank independently, and this is the kind of activity which used to be there back in the 2000s, many other national central banks every now and then do this. As a result of this, the central bank puts into economy new money which creates inflationary pressure, and as a result, the real exchange rate, the nominal exchange rate is weaker, but the real exchange rate is going to appreciate, and that appreciation is going to take place because of the higher inflation in the country. And dear colleagues, Andrei. Good afternoon, Andrei Ostrouch, Reuters. I have several questions. The first one, you were talking about the fiscal rule. Does this mean that the central bank may start transacting within the fiscal rule before the end of the year? And once it is brought into effect, I mean to say, will central bank be buying currencies from the friendly nations? And the second question about inflation and the parallel imports. Could you please tell us, how do you see the impact from the parallel imports upon prices? To what extent it might expedite inflation, and if the nominal ruble exchange rate goes down, would it mean that the manufacturers might again raise their prices because ruble is going to be weaker? And one more specific question about HSBC and the Export Bank. Has the central bank received any notification or application from these banks, and what does the central bank think about this deal? As far as our transactions in the currency market are concerned within the fiscal rule, if it is introduced this year, well, certainly we are ready. Once it's introduced, we would be ready to act within the fiscal rule. It's just that the range and the indicators or the parameters of these transactions would be announced once the decision about the fiscal rule is passed. But certainly before such transactions are started, we will be quite predictable in this sense. Now, what are we going to buy? It will depend upon the Ministry of Finance, because these transactions we're going to do as tasked by the Ministry of Finance, and the toolkit is going to be defined by the government for this. Now, as far as the parallel import and its impact upon inflation is concerned, we see it in a slightly different way. We believe that, on the contrary, the parallel import will bear a disinflationary effect because the supply of goods in the market is going to grow. And that is why there would rather be a disinflationary effect coming from it. Alexei Borisovich would like to comment? I mean, parallel import? Yes. The currency exchange swing. Yeah, the parallel import is something that there's nothing more to add to it. You have formulated your question that parallel import is more expensive than the same kind of import before it, but we need to compare it not with the previous situation, but with the way it impacts supply-demand in the new reality. In the new reality, the parallel import is definitely increasing supply and is disinflationary in this sense. Now, as far as the currency exchange swings are concerned, yes, thank you very much for such a good question. I think this is a bit the thing to think about in the following way. The exchange rate has changed quite strongly both ways, and I suppose that the level of exchange rates which we are observing in June, July, definitely that hasn't transformed itself into prices fully, and I even would say that it is far from all companies that have transformed or converted them into their business plan. I mean to say that the business expectations for the new balance, it will be identified at a certain different level, and so respectively, if there is a reverse move in exchange rates, that won't create an additional stable pro-inflationary pressure, but that would quicker exhaust one-off factors related to the exchange rate being brought forward into the futures, and we will see the stable growth rates which are currently being muffled by the fact of the exchange rate delay which has been occurring from March until June. And as far as the HSBC and Export Bank transaction is concerned, we haven't received any applications or any notifications for clearance. The next question comes from online. Igor Lavrinkov of Partner Kemerova business publication. To what extent, as thought by the central bank, there is a difference between the social and economic situation in different regions because of the sanctional pressure? Which regions are losing more and which of them feel quite all right? It is an appropriate question because situations in different regions are different. In many ways, this is explained by the structure of the economy, not in many ways, but it is fully related to the economic structure in individual regions. For example, in the Northwest, where there was a big share, traditionally big share of companies which have been oriented towards the European market, as a consequence, the decline there is stronger because those companies need to redirect them to other markets. Asian markets would mean a longer transportation lag, and clearly these businesses have to make their plans meet the end, so to say, but there have been other companies more directed to the domestic market or the Asian companies. For example, the south of Russia, traditionally strong in a tourist cluster, and small and medium businesses with agricultural manufacturing are not suffering as much. And actually, you can take a look at different regions in our regional economics report, because we are going to be publishing it, and so it will demonstrate to you the description of what is happening in different regions, how the companies are adjusting themselves. You'll be able to see it there. Yes, Christopher, I see that you've been trying to stretch your hands for quite some time. Good afternoon, my name is Christopher Kenny from a British agency. My question is about the currency deposits, because foreigners have them and the Russians have them. And my question is about the way the local banks, I mean, there's money that they don't have any necessity for, but the local citizens don't have any access to it. So why don't you allow people just to take this money and put it under their mattresses? Since the government don't need it, the banks don't need it either. So it happens so that the Russian citizens, the government is preventing the people to get access to their money, and have been preventing them for almost half a year. How one can get this money? So, well, basically, these have been my Russian friends who asked me to ask you this question. Well, indeed, the banks are not very interested in keeping foreign currency in their deposit, and that is why they're introducing different kinds of fees for transfers and depositing this. And this is a forced measure. It's not that they want to make money from it. This is the consequence of the sanctions. If you need to transfer foreign currency, and that can be done through a foreign bank correspondent account, and if the money gets stuck there, this is the risk for a customer, without mentioning the bank itself. So it's not that the banks themselves are trying to make more money off such transactions, just that such transactions have become very risky. The same applies to currency deposits. They can be frozen, and that is why such risks is what the banks are trying to reduce for their customers. Well, you are asking, why don't you allow people to go and get their currency in cash and keep it under the mattresses? Well, the fact of the matter is that, unfortunately, bringing in currency, foreign currency in cash into Russia is illegal. We also have sanctions in place here, and that is why the supply of the foreign currency in cash is limited. There is an already circulating foreign cash. There is foreign cash in the banks, which is intended to allow people to withdraw foreign cash within an established cap, and the cap was 10,000. And what's importantly, that cap covers almost 90% of all of the currency deposits. I mean, 90% of all of the people who have currency deposits, they can withdraw their deposits in full, and very few are in a rush to do so. That is why, regrettably, things that you are describing is something that is very much of concern to people here. But this is the result of the sanctions introduced against the Russian financial sector. Next question comes from online. Denis Yelahovsky, Funny Money Media Project. Good afternoon. Thank you very much. I've got 2.5 questions, if I may. 1.5 about imports and 1 about the currency cash. With respect to the imports, in the beginning of July, the central bank, in its assessment of the key aggregates of the payment balance, came out with its description of the import decline year-on-year at a 2.5%, and that is noticeably less than the prevalent majority of the expert estimates, which one could find in the public domain before the central bank report was published. That is why I've got 1.5 questions. If the import turned out to be less by a quarter than 30 or 40%, as many expected it to be, does it mean that the reserve at any potential demand for currency on the part of importers is not such an active leverage to weaken the ruble in the future as it had been believed before you published your statistics? And further specific question with respect to the import issue. There is a bit of a confusion because the assessment of the import volume following the statistics given by the trading partner countries and the data which is without detail being published by the central bank are very much contradicting each other. Don't you see a problem here? And doesn't the Central Bank of Russia planning to go back to publishing information, disclosing information about the foreign trade in the banking sector in the previous details, that is about import as far as the foreign cash is concerned? Do I understand correctly that the kind of prohibition that's currently in place until September 9th to withdraw the currency cash that is purchased by the customers from the banks following March 9th, and that cap, which is 10,000 on the currency before March 10, is what you plan to extend? As far as the import is concerned, the import went down according to our expectations. Experts had very diverse outlooks. If you take a look at them, within different macroeconomic indicators, it was quite a range, understandably, because the situation was far from being certain. But indeed, based on our statistics, the import of goods and services went down by 22%. But speaking about the imports impacting the exchange rate, one should look not at the imports, but at the current account. And the current account, indeed, historically is at its record high level, and so you need to correlate that between each other. As far as the discrepancy in the statistics with our trading partners, I do recall that there was such a discrepancy always in place because you look differently at the country of the origin of a particular product or good. But what you're saying, a different question about us publishing this. Indeed, we are currently publishing our payment balance in an aggregated data shape and form. We will be ready to start disclosing more detailed payment balance once the government discloses and makes detailed information about the foreign trade available, because we're very well aware that for analysts and experts, availability of such information is crucial. Yes, and the foreign cash, you wanted to add something about it? Yes, just a few words. Now, first of all, I would like to underscore that we understand that this information is very important not only to analysts and experts, it is important to all of the economic players, households and businesses, in order to properly understand and correctly interpret not only what is happening in the foreign trade but also in the exchange rate dynamics. And that is why going back to a normal format of information disclosure is going to be useful. With respect to the imports, I would also like to emphasize yet again that this reduction by 22% is the change of the nominal import. All of the comments that sounded there about the scale of the both imports and exports falling were about the real terms, but the dollar price is changing very significant. So 22 nominal is more or less correlates to what has been expected broadly. And about further extending the limitations which are currently in place until September 9th, unfortunately, at this point in time, we have no reason to expect that the situation with the foreign currency cash coming to the country may change for the better in the foreseeable future, and the kind of the decisions that I mentioned, I mean, in the unfriendly countries prohibiting importing foreign cash into Russia remain in place, and at the same time, Russian banks must have the possibility to provide for all of the citizens full entitlement and access to previously opened accounts and within the official limit or the 10,000 cap to make it available. So in September, unfortunately, we will have to extend these restrictions that we introduced in the beginning of March. Dear colleagues, please, Vika. Yes, I've been watching you for a long time. Good afternoon. Thank you very much, Victoria Sherkina, blogger. Recently, the central bank introduced the new concept, or rather the development of the old concept of investor right protections, which was about the full prohibition to have unskilled investors purchase foreign securities and foreign stock. Why there is a total prohibition without distinction between friendly and unfriendly jurisdiction? Because with respect to the currency, we have this. There are friendly currencies that the citizens can protect themselves from their rubles losing value. And I cannot but ask about the unblocking, the foreign securities as part of the National Reserve Fund. Well, indeed, in terms of protecting the rights of unskilled, unqualified investors, we propose to the non-qualified investors in the Russian market not buying foreign securities issued by unfriendly nations. We'll further specify additionally friendly, unfriendly jurisdiction because unskilled investors quite often are not able to possess neither the information nor an awareness of the risks that such securities can be frozen. And in the current predicament, there's a very big number of people who are suffering from it, and so we don't want this problem to grow, because I do think that the people who got caught in this soup, they will appreciate the introduction of such a restriction. As far as the National Reserve Fund is concerned, the Moscow Exchange is very actively engaged in it because there is an investor protection club that they have established, which includes both the representatives from the biggest banks, brokerage houses, and professional market players. And so the purpose of this club to stand by their rights jointly and to prepare court filings against the measures initiated against them. So many questions. Alina, please. Yes, good afternoon. Alina Razumova, Frank Media. I have 3 questions, and my first question is with regard to something you stated previously about the foreign banks selling their Russian subsidiaries. Could you please tell us if the parties are going through the negotiations, should they cancel them and call off their deals? The second question, the central bank is the only entity which can see the bank's reportings. Could you tell us how did they finish the first half year? Above or below the central bank's expectations? Also, the central bank was afraid that the payment of dividends and different payments to the management of the companies may negatively impact the bank's stability. Have your expectations come true? And the last question is about the mutual funds and the pension accumulations. The central bank has always been promoting very conservative, well-thought-out approach towards investing reserve accumulations and the national pension funds. And because many investors left the market, ever so often we hear about the proposals to invest pension accumulations into different projects. Could you please tell us whether your attitude towards it has changed? Do you believe that the instrument should be broadened and risks should be raised for the pension money to be invested? Thank you very much. As far as the sale of the Russian subsidiaries of the foreign banks are concerned, if negotiations are underway, in any case, I feel that even in the preliminary way, you should get the permit from the government commission, because the prospect of getting such a permit is very nebulous. As far as the analysis of the bank's financial status is concerned, yes, the banks haven't yet been disclosing their reporting, but we're thinking about the way they should start doing so. As we were mentioning the payment balance in the similar token, we believe that the banks should be transparent to their investors and customers, as well as to their partners. And this is the issue that we're actively discussing now in terms of the format and when the banks should be disclosing their reporting. I believe that the qualitative assessment of it is such that the banks have gone through these crisis periods much better than we had expected. Now, the conclusion at this point in time, in terms of the there is no need for systemic capitalization of the banking sector. I personally thought in the beginning of March, because the shock upon the financial sector was so strong, that despite the previously established buffers, despite the previously achieved financial stability, we thought there would be a need for the additional systemic capitalization. Currently, we don't see the need for it. Now, with respect to individual banks, there might be a need to help the owners in order to keep them steadily afloat. We are keen on gradually moving out of the regulatory easing. We see that the banks are ready for it, not all of them, but nevertheless to start doing it step by step. And as far as dividends are concerned, yes, indeed, some of the banks are paying dividends, but our position was such that if the banks have a good status and at the same time they don't use any regulatory easing, they can pay dividends. And some of the banks are exactly in this way. They don't use any regulatory easing that we have made available, and they can afford to pay dividends. And the third question was about the pension funds. A very good question indeed, because it is true that a lot of ideas, a lot of proposals for the pension funds to start more actively and broadly investing, assisting the economy in a structural transformation. This is really great, but to us as the regulator, the major task is to ensure the reliability of investing pension accumulations. You may take a look at how to expand the tool set for that, but not at the expense of the reliability and the safety of the pension accumulation. This is number one priority, because really what we're lacking is a class of institutional investors, and one ought to more actively develop different kinds of collective investments like direct investment fund. Take a look at the way they should be regulated. We spoke about the possible tax benefits and exemptions. So this kind of an institutional investing, direct and equity and collective investments is what we should develop. The next question comes from online. Elizaveta Vereshchagina, the Belogorye world. Elizaveta? Yes, good afternoon. Good afternoon, dear colleagues. Good afternoon, Elvira Nabiullina. We have two questions. Over the past few months, there is a business mortality that has grown in our region as well. Do you believe that the measures undertaken to support businesses are enough? Are there any new mechanisms that are being prepared? And how overall do you think about the future of the business environment in this country? Another one. On more than one occasion, you stated that you are not going to reduce inflation at any cost. Now, what is the inflation trajectory that you would allow for, bearing in mind the fact that the loans should continue remaining available? And is it possible to reduce inflation, or rather for inflation to grow right after it is brought down? And what will then your monetary policy look like? All right. As far as business mortality is concerned, well, the businesses closing, in terms of statistics, grew this year, but you cannot judge year on year because, for example, compared to 2020, in 2020, the number of legal entities, in terms of the quantities of them which closed, was more than during the pandemic. But what's important is not the speed with which the businesses close, but the emergence of new businesses and how the scale of the operations enhances, because the structural transformation would definitely mean that some of the businesses are going to reduce their output or maybe even close down, while others are going to increase their output, and new companies may appear in the market. As far as the business sentiment is concerned, it is very diverse. There are different indicators because we also have our own indicator of the business mood, business sentiment. We measure it, and so during the past few months it has been improving. That is an optimistic signal. And as to the inflation, we do confirm that within the structural transformation, after such a dramatic inflation hike, for a certain period inflation may deviate higher from our target, but for the next year, shall reiterate it again, we see our inflation forecast 5 to 7%, which is above our target of 4%. Yes, during certain periods, inflation or the price rate growth may be stronger, and it is very important to understand whether it's a one-off thing or it's a steady trend. If it's a steady trend, we can and we will respond to it with our rate in order to bring the inflation back to the target, which is 4%, because faith in price stability is the most important driver behind the ability to reduce longer-term lending rates. Against high inflation, long-term lending is not available. That is why the price stability used to be and remains our priority. Dear colleagues, please, Maria, in the first row. Good afternoon, Maria Slobodyanskaya, Russia 24. In a number of liberated territories like Kherson and Zaporozhye, the ruble is already in circulation. When one may expect that ruble will become the only currency within these and other liberated territories? Well, a ruble indeed is circulating in these territories along with hryvnia. It's difficult for me to give you any time frame. Dear colleagues, please, Margarita. Margarita Mordovina, RBK. I will have a question about the National Cash Center. When the National Reserve Fund went under sanctions, you recommended the banks to reduce their currency positions in the National Settlement Center. Have the banks followed this guideline? To what extent their currency positions were reduced within 1 month after you told them to? And principally speaking, the open currency position of the banks, has it changed in any way after people actively started switching to rubles? Well, the banks of Russia see a positive trend in the process of reducing the value of the currency assets. And throughout the banking sector overall, we have a long open currency position. Over the past few months, it has grown, but it is lower than in March. Why it is happening? Because getting out of currency-denominated assets, getting out of the currency-denominated liabilities is taking place faster than getting out of the currency-denominated assets. So on the liability side, it is much faster. And we see that not only under our influence, but also, unfortunately, under the influence of the sanctions, the banks continue to actively take measures to reduce the currency component in their balances. They understand that this is a risk, despite the fact that we temporarily have introduced certain currency easing for the banks which are under sanctions, but we made it possible for this easing to be followed, but they must have plans to exit these currency positions, because we have no intention to extend this regulatory easing post-January 1, 2023. Next question comes from Evgenia Pismina from it's in writing, sorry, from Oksana Shevchenko, from Kurska Pravda. Over the past few months, the central bank made very diverse decisions on the key rate, dramatic reduction, dramatic raising it compared to what it did last year. Doesn't it confuse households and businesses who suffer from high uncertainty? Maybe one should reduce the key rate down to the minimum level of 2 to 3%, and that's it. But don't believe we are confusing anyone. Of course, the uncertainty is very strong at the same time, and the scale of external changes are unprecedented. But even within such circumstances of such uncertainties, we believe it is crucial to ensure that the key elements of stability are in place: price and financials. So our decision about the key rate, yes, dramatic increase. It was brought about by the need to regain financial stability and then bringing it down in order to ensure gradual coming down to provide for the price stability. In our mind, these are the key elements for businesses and for business planning. Now, I mean, if you are saying to reduce the key rate as low as we can, down to 2 or 3%, what would have happened? Most probably, what would happen is that money from deposit would immediately disappear. And I previously stated that households are currently have relocated their time deposit into the current deposit from which they can easily spend money, which shows that people are ready to reduce the money they store at the banks in order to consume services and products. So if it were to be 2 to 3%, I mean the key rate, against the double-digit annual inflation, then people would rush to buy goods and services in order not to see the value of their money fall against the fall of the imports. And so what we would end up having is an extremely powerful inflation, and there won't be any price stability at all. So any dramatic action to reduce minimum levels of the key rate would simply bring about inflation, because people would see their savings lose value, and lending won't become more available because if the banks are giving you a loan, because yes, within the short-term period they more reliant upon the key rate, but in terms of longer-term lending, they follow inflation. So against 2 to 3% key rate within the long-term inflation, definitely the interest that you will pay on a long-term loan will be double digits. So that won't have any positive effect. And so specifically what we do about reducing inflation and our action with respect to the key rate is specifically to make adequate and available long-term lending to businesses and households. Evgeny, please, in the row before the last one. Evgeny Popov, InvestVicha. A few words about the labour market. You mentioned that you're not commenting on unemployment, but nevertheless, you also said that the labour market is going to change, and so basically the skills are going to change. How eventually that might impact the wages, the demand for labour, and the monetary policy. And my second question is a bit in terms of the conspiracy theory, considering the fact that you so dramatically reduced the key rate today. Is it because, for example, the geopolitical environment is aiming to reduce Russian oil exports, plus introduce the oil price caps? So what does central bank think about it? And, well, generally speaking, what's the central bank's take on it? I see. Very well. As far as the labour market is concerned, the structural transformation of the economy is definitely going to be accompanied by the structural changes in the labour market. Some of the skills are going to be in a greater demand than the others, and so these kind of changes are definitely going to be taking place, and the wages are going to be looking different in different industries where there is a shortage. Because you may recall after the pandemic, when remote services were really, picking up, what was felt then, this tremendous shortage of IT experts, IT skilled people, and cybersecurity skilled people. Now, the way that may impact the overall unemployment will depend upon the pace with which the labor will be freed from out of the industries where the manufacturing contracts and into the growing ones. And the speed of it would also depend upon the extent to which your skills, your knowledge, your specialty is going to be sought after, how long it will take you to upskill or retrain. And so it is very difficult to offer any quantitative measurement, but this is the kind of process that without doubt is going to take place, and you should be really cognizant of it. And so the general unemployment aggregates shall definitely impact inflation, and we will take it into account in our monetary policy as far as geopolitics are concerned, and the possible price cap for the export of oil. Well, I don't even want to hypothesize whether it's real or unreal, but if this is something that manifests itself in this or that way, I believe that most obviously that will lead to the global prices growing. And to the extent I understand, the countries which are going to introduce this price cap, we're not going to ship our oil to them, right? But nevertheless, our oil products and refined products will redirect themselves towards the destinations that are eager to cooperate with us. And because it is going to take place against the backdrop of the global oil prices growing, even against the quantitative indicators easing down, this might have a lesser effect upon all the indicators, such as the payment balance and the exchange rate. But without doubt, that is rather a question to the government. I simply commented on it in terms of how it might affect macroeconomics. Well, dear colleagues, our time is coming up. The last two questions, please. Yes, Natalia, go ahead. Natalia Zarotska, Vedomosti. I've got one question about one of the previous statements and a second question about the fiscal rule. What are the currencies that one should rather keep your additional currency incomes from oil and gas? And another question, currently there is a preparation for the second reading of the draft act about electronic archiving. Is it something that you're having discussed with you as a Bank of Russia? Are there any objections that the Bank of Russia has? And what is the most optimal way of digitalizing the documents that the central bank views, and has it been reflected in the draft act? As far as the fiscal rule is concerned, now, in terms of the assets that the government is going to keep its values in, because within the fiscal rule that would be for the government to accumulate the assets, and we are ready to discuss it with the government within an advisory initiative. But the number of assets that you could keep is not quite a broad one. You can discuss currencies from the friendly nations, where you should definitely take into account their stability and their respective market liquidity. All of these things are being taken into account when you are placing your assets into anything. As far as electronic archives are concerned, definitely we support transforming paper and documentation into electronic forms. We know how high the costs are that the banks are incurring because of the need to store documentation in hard paper. So, I mean, their lending definitely reflects a bit of that in the interest. So, inside the Bank of Russia, we have our own digitalization programs. We have digitalized so many processes, and we have digitalized so many documents. Whatever is allowed not to be stored in paper, we digitalize. But in terms of the specific details within the draft act, I mean, we may additionally specify. It's just that I don't have any information available to me right now. Nastya, the very last question, please. I have a question from my colleague, Tatiana Chubasova. She's unable to connect to the meeting online. Could you please tell us, the central banks has always been talking about returning the trust of the retail investors to the stock market, but to the extent we know, the Gazprom's decision to give up on paying dividends has undermined their trust very strongly. They're very upset. So how can you regain such trust because of this decision? Maybe certain corporate action undertaken by Gazprom might regain this trust, let's say, the buyback. Another question, what are the national indices that the central bank is working on? Could it be just the oil benchmark, maybe certain precious metals benchmark as well? Well, I do agree. The trust of the retail investors is extremely important at this point in time. So measures will need to be taken in order to raise the level of trust from the retail investors, because so many events have taken place which negatively impacted retail investors' sentiments related to the introduction of external restrictions. It is difficult for me to comment on any corporate activity by Gazprom. I will refrain from it, but without doubt one of the elements that the retail investors are looking forward to is the dividend yield, and this is something that you must keep in mind whenever one discusses the regaining the trust from the retail investors. Well, national indices are very important to us because that will constitute an important source of data about the market prices in the conditions where we no longer can rely upon the global indices which had been previously used actively. So the first such index, wheat index, is there, and we're working together with the government over the whole array of such indices with respect to the commodities, definitely not only commodities, but exchange commodities. It is very important for these indices to be launched, and what's not least is important is the interest towards them on the part of the potential users. And so this work is going to actively continue, including the precious metals as well. Colleagues, thank you so much for your interest. Thank you. Thank you very much.